Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back to the video recap here of the trades that we made for the membership side of our blog. And I wanted to, before I go over the new trades, thank you guys so much for your continued support of our website here at OptionAlpha.com. Again, it's just a very small crew that runs this, me and a couple other guys that I hire out for specific design work. But you can see that over the course of the last year, a lot of the changes that we've made with regard to the new text trading alerts, which everyone loves, and also the video updates every night. Again, everyone's loving this stuff. You can see visually on our YouTube account that we have had the views just kind of explode since the end of December. So again, thank you guys so much for continuing to support what we do here, spreading the word as always. Continue to let me know exactly what we can do to help improve this service, because again, this is all for you guys. So let's get into the trading alerts that we made today. Again, just opening trades today, had no closing alerts, so go ahead and have fun with just these opening alerts. But I'll start off with the one directional trade that we made, and that was on COF, or Capital One Financial. And we bought two vertical March 67.5, 72.5 calls. So it was about a $10 wide call spread, or $5 wide call spread, and we paid about $267 for those call spreads. So again, this is a directional debit call spread. So what we're doing here is not trying to take advantage of any volatility crush or time decay or anything. All we're doing is simply purely making a directional trade on COF. And so when we go to the actual charts tab, and forgive me for not using the Thinkorswim charts because wonderfully their platform is down again this evening. So I'm going to use the OptionAlpha.com charts that you guys have access to. As always, you can check these out free on our website. But you can see that Capital One Financial has had a really tough time, and I think it's almost 7 to 8 days in a row that it's been lower. But you see that now we've come into an area of generally long-term support. So you see that right around 69.70 as far as a price. We've had some really good support for Capital One, so I think in the near term we should see at least a little bit of a bounce as we head towards March. But again, we're going to give ourselves a lot of time. All we need to make money on this trade is for Capital One to trade anywhere above where it's trading right now between now and March expiration. That's it. So again, just a short-term directional trade, but also allowing ourselves lots of time to be right on this particular trade. All right, so let's get into some of the verticals. And again, forgive me for not being able to use Thinkorswim tonight. Again, their platform is down, so I'll just use the charts. But these verticals that we entered here today, again, just really taking advantage of the implied volatility that's still in the market. Still had a rough day for stocks today, but that's great for options traders. Again, with implied volatility swelling, that means that these option premiums are swelling, allowing us to enter some of these trades with some really nice credits. So FXI is one that we entered. It's a March trade, as are pretty much all of these trades that we entered except for the Google one, which I'll go over. And it was the 33.32 put spread for 25 cents. So a little bit less than what we wanted to get as far as a credit for that. We usually like to get around 30 cents for credit, but that's okay. We made up for it. We traded a little bit larger contract size. We moved a little bit further away from the market. Really, the whole idea with FXI is obviously that it's continued to trade much lower over the last month and a half, and you can see that visually again on the chart. So all we're doing here is taking advantage of implied volatility by trading the vertical spreads, but then making more of a directional bet in the market by trading the put side. So again, you could easily trade the call side if you think that FXI will continue lower between now and March expiration. But we kind of think that it's a little bit overdone, and we're going to play the upside in the market here, at least the bullish side of the market. So that's why we traded the put side. Again, with implied volatility this high, you can trade either direction, but you just have to make a little bit more of a directional assumption. All right, I'm going to skip over Google for a second and come back to it. And then let's go to the vertical spread on SPY. So this is the major S&P 500 ETF. Traded the March 174.172 put spread. So again, a $2 wide put spread. Take advantage of widening out these strikes, taking in a little bit more credit, and saving some commission. That's exactly what we did here. Instead of trading the 174, 173, widened it out to the 174, 172, and took in a nice credit of 47 cents per spread. Again, nothing too major here other than the fact that we're just, again, taking advantage of what the market has. SPY and DIA, or the Dow and the Diamonds, have had a huge sell-off. And so we saw some support come back into the market today. You see this area of prior resistance back in November now became support in December, and that's exactly where the market stopped falling today. So I think at this point it's safe to assume that we could see a nice little 1 or 2 day bounce here. At least that's what we're hoping for and positioning for. And so by doing this, we're again taking advantage of volatility by trading the put side of the market. All right, the last one that we'll go over before we get back to Google is FTX. And so you can see on FTX, we sold the March 140, 145 call spread for $1.02. Here's the idea with this one. Again, taking advantage of implied volatility. So we're still selling vertical spreads at this point. But with FTX, we also wanted to make our portfolio a little bit more even balanced. So we have a lot of call positions that we've entered recently. So just the vertical call spread in COF or Capital One, the put spread, which is just a directionally bullish trade in FXI, same thing with SPY. So we wanted to, again, make our deltas a little bit more neutral and take some trades on the opposite side of the market. So for FTX, we sold the 140, 145 call spread. Again, we go to that chart. You guys can see that visually where we put our positions. And again, you can see that even though it's had a real big move down, we actually took our position at 145, which also gives us room for FTX to move up, but not turn this into a losing position. So we gave ourselves room, and this is what implied volatility does at this point, is allows you the opportunity to move your positions a little bit further away. So our strikes are at 140 and 145, and our first strike here at 140, that's the one that we're concerned about always, is that first level strike. But again, it gives us an opportunity for FTX to rally with the general market, but then also possibly continue to fall or at least stay lower through March expiration. Again, balancing out our portfolio, making us a little bit more even on our trades so that we have an opportunity to profit from both directions of the market move. So again, that's why we just kind of flipped it around on FTX and traded the call side of the market. All right, so let's get to Google. So Google is an interesting one. It was actually a hedge that we entered today. Google's had a tough time recently and probably will continue to have a tough time from all the earnings in Apple that just came out recently. So what we did here with Google is we already had a put trade that was already working and on the 1085, 1080 put spread for February. So again, because we only had a $5 wide strike, we went back in and picked the same $5 wide strike. So we didn't widen our strikes out at all, but we went back above the mark and said, okay, you know what? If Google's going to continue to sell off and it's going to start to get close to our position because Google's trading at 1101 right now, and we have the 1085 first strike puts, then we're going to go ahead and go into the market and sell a call spread against Google and take in additional credit. And so that's what we did. We went ahead and sold a call spread against Google at 1145 or 1140, 1145, took in a nice fat credit of 157 per spread that we sold. But again, here's the thing with this hedge is that we didn't add to our risk. All we did was take in additional credit, which reduces our cost basis, reduces our risk on this trade, and moves our break-even points out. By having the put spread and then now adding the call spread, we basically turn this into an iron condor on Google between 1085 and 1140. So again, let's go visually to the charts to look at what we're talking about here. Type in Google, and you can see Google's had a real tough time. So again, our positions are right here at 1085, which is about right there. And so we said, you know what, we're going to go in here and sell the 1140 calls and basically make an iron condor in Google. So all we want is Google to trade in between this range between now and expiration. And so that's what we're looking for, is Google to trade in between that range, implied volatility to come down. That allows us an opportunity to take a profit. Now again, it doesn't mean that we have to stick to these positions all the way through expiration. So what we're going to likely do is try to play the market a little bit here. So if the market rallies up or falls down, then what we'll likely do is take one of the positions off, bank some profits, and hope that the market cyclicality will turn back around for the other position. But again, at this point, by adding the hedge, we did not increase our risk. We did not increase our potential loss. All we did was add more premium, more credit that moves out our break-even points and reduces our cost basis on the trade. So I want to go over that one in detail, and I was hoping to get into the Thinkorswim platform to look at the pricing and the probabilities, but that just didn't work with their platform tonight. So again, hopefully you guys enjoy these videos. As always, please add your comments below, and happy trading.